Just like that, we have brand new all-time highs in the market for both the S&P and the Nasdaq. And funny enough, it's exactly where some subtle bearish divergences are starting to show up. Now, with the lockout rally complete, it's not about trying to short a major top. It's more about staying diligent enough to find higher lows and continuation patterns that will resolve to higher prices. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and the first thing we should try to figure out is what exactly is going on here from a trend perspective. And when it comes to that, our job's pretty easy. This is a brand new all-time high, which means that it's the highest high in the trend count, and all we've got to do to maintain an uptrend is just set a higher low. Well, where's the last higher low? It should be above that, right? Well, there is no higher low. It's just the lowest low of the trend count from way down here, which means that anything will do. Now, do I literally want to see any higher low? Not really. And in a picture-perfect world, the ways I'm looking for this chart to develop are really as follows. Either just straight up continuation, noting that we've closed at the highs of today's range. If we consolidate in here, that would be bull flag consolidation over the left side pivot at 693.35. A Brigade bolt to blue sky territories should seek continuation. If we pull back a little bit more deeply than that, that's fine. Tuesday's gap fill reversal level could then set this up, and then continuation off of the same setup, consolidation, after reclaiming 693.35. The gap fill area in here is between 687.60 and 686.20. That would be a picture perfect higher low in the trend count, repairing some structure and continuing in the upward direction. Now, the line in the sand that I'd like to see in the short term would be around 676.25, right? It's this level right around in here, the bottom end of the prior balance range, and it's going to be confluence with the daily 50 SMA over the next couple of sessions. Do I want to see us move there by Friday? Probably not. If we were to get a look above and fail and retrace all the way down here by Friday, think about what the weekly bar would start looking like. A nasty, nasty upper wick on that, kind of signaling some topping. Now, if that happens, then so be it. We'll have to take that setup in stride, but I wouldn't want to see this pull back into the end of the week. If we are going to pull back and still qualify for a daily higher low in kind of a respectful manner over 676.25, what I might imagine is a look above and fail. You come in here, you consolidate, you try to close the gap, but when you bounce, maybe you set a lower high up against that 693.35, and then you pull back again, and then maybe, my timing is way off here, but perhaps next week or even the week after that, you're starting to step up and see if buyers are going to react to 676.25, right? And again, the timing is way off here on my drawing, but you get the point. That would be maybe sometime next week, maybe even the week after that, somewhere in here, okay? So that's a daily higher low situation where I would really be looking to become a buyer on these higher low attempts for continuation in the upward direction. What I also like about this particular level right around in here is from a higher time frame perspective, if we just pull a fib from the low up to the high, this would all qualify as bull flag consolidation. Again, I don't want to see us there by Friday because I want to avoid the nasty weekly inverted hammer that would look like this. But if we close the weekly bar, who knows, maybe something that looks like this perhaps, and then we pull back again next week a little bit and leave a wick behind, now all of a sudden, right, and imagine on the daily chart, this looks something like this, right? So we pull back to end the week, we close here. Next week, we pull back into the level, then start to bounce off of it, and then we close here. Now all of a sudden, we're setting up a weekly higher low as well, once again, over that fib 38.2, over the daily 50 SMA, and we qualify weekly higher low and daily higher low at the same exact time. So that would be here at 676.25. So what are some threats to the base case? Well, if the market pulls back more aggressively than I've sort of forecast here, something that looks like this perhaps, and then we're looking like this, and then doing this, I would still advocate for a gap fill reversal trying to find a long, but the complicating factor just becomes, clearly you start rejecting here and you're dealing with a much more clean daily lower high. And does the weekly trend flip back to down on a breakdown from there, right? We'll take that in stride when and if it happens. But on the first attempt at a gap close here, which would be at 659.50 underneath the Wednesday low of last week at 671.20, I would still be looking for a higher low attempt, and mainly from the weekly perspective, right? We'll deal with this situation when and if this even plays out, but that's the threat to the base case at this point. Let's also address the elephant in the room, which everybody seems to be really concerned about online, which is that there's incredibly light volume as the market drifts in the upward direction. And I would just really encourage you to pause, take a deep breath, and not have short-term memory loss. let's scroll back and let's take a look at what happened when we came out of the April tariff tantrum low. Was there yellow volume bars that were printing, or I should say were there yellow volume bars that were printing down here, meaning lower than average? The answer is absolutely. Low volume rallies after a major low are fairly standard, right? That's typically how your V-shaped recovery is going to act. Let's even look at this low from back over here. This is a fairly V-shaped recovery. I mean, I don't know about you, but all this volume in here was fairly light as the market continued to drift in the upward direction. So let's just answer the question, are we ultimately concerned about the low volume? No. And if you want to apply a little bit of logic here, you could go through this mental exercise. Why might the volume be low? And why is it not a concern? Well, if you're a stronger seller and you're looking at this gap up as an absolute gift, oh my God, can you believe it? They're going to give us higher prices to short again? You would be throwing everything in your account. If you were fully convicted, oh my God, the market's going to crash and burn and go to zero, and mainly, right, we're talking about, put yourself in the shoes of institutions and so on. If they're going to short this market aggressively or be sellers, they're going to conduct a heck of a lot of volume here to get out of their positions, thinking that markets are going to go lower. So if on the gap up, we actually saw high volume, if we saw higher volume as the market pushed higher, and then we started to see some distribution looking days in there, that would be a huge red flag. So the fact that there's really light volume just reinforces to me, number one, stronger sellers aren't really attacking this market in mass. And then number two, right, if this is, if we can move the market higher on really light volume, think about what happens when people do rotate back into the market and say, geez, this isn't just like a quick blip on the radar and it's actually going higher through the all-time highs. Think about what that'll do, right? So that's the volume explanation here on the SPY Daily. Not really all that concerning. The name of the game is higher lows. Let's get down to the hourly chart. Let's just talk about a couple of key reference points in here. The main thing I want to do is just throw on the intraday anchored VWAPs. I mean, there's really not much difference on the hourly chart as the daily chart. It's the same concepts we just talked about. If we open on a gap up, failure back down into range, something that consolidates in here, maybe it's Brigade Bolt, and that's the only higher low you get. If you pull back deeper than that, excuse me, I would be looking for the Tuesday gap close area, which will be confluence into the end of the week with the last Wednesday's anchored VWAP, right? So that would be a great spot in here to marry up for confluence and look for the higher low, back to here, and then continuation, right? If we drop that area, that's where, sure, maybe the deeper pullback does step up and you could start to achieve something like 676.25. Although, as I've already talked about, I would prefer that really waits for at least next week. This pink arrow line in here, it is technically the anchored VWAP from the prior all-time high anchored to back here, and that is confluence with the 676.25. Once again, reinforcing that as a key higher low spot. All right, that's pretty much where we'll leave it. Actually, let's go one more. Let's grab the fib. Oops, we got to grab this first. Pan tool, there we go. Let's just grab the fib from the gap up rally so far. From here up to here, what do we have in terms of confluences? Fib 38.2 isn't perfect with the gap fill reversal. It's really not as clean as it could be. If anything, I would just say if we do have this consolidation here, it's just well above the 38.2. This would be a perfect bull flag on the hourly, looking for it to resolve higher, so long as risk appetite remains elevated, which at this point, it certainly does seem like it is. Let's go ahead and clear that up. Let's take a peek over at our market internals, which is where really our first set of divergences come in. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. I want to be very clear here as we start talking about some of the divergences. This is not a bearish call. This is not a crash and burn call. This is not, oh my God, let's short and play for the pullback. This is just like, hey, if you're not already long, are you really inclined to chase new longs at the tippity top? Probably not, in my view. Excuse me, working on a little bit congestion there. So you had really strong volume flows on Monday. Notice how they tapered off on Tuesday and then tapered off again on today's Wednesday session, even though the market continued to rally in the upward direction. If you take a look at the advanced decline line, really impressive on Monday. Still decent on the Tuesday session. And then again, it's like, okay, getting a little bit weaker here on Wednesday. That would be a breadth deterioration indication, if you will. You can see the same thing out of the cumulative build on the tick. Strong on Monday, okay on Tuesday, and a little bit weaker on Wednesday. Once again, this is not a bearish call. This is just a sort of reminder that as the market slows down, approaching that all-time high, now is not really the time to be putting on the long. The time to be putting on the long was either the breakout on last Thursday or the breakout on Monday up and through Friday's high, right? That's kind of when the long needed to be put on. Not really now as we're approaching the all-time high. A pullback, some consolidation, something of that nature would be a little bit more acceptable to initiate new long positions with and up against a higher low. Let's go take a look at the market profile here as well. And what do we see on the profile. This is less of a divergence and more of just an indication that there is thin structure below us, which opens the door for liquidity. Not liquidity crap. We don't use that term around here, but rather liquidation break, right? If we're going to get liquidation break, we've got thin structure single prints in K period, J period here from today's session. We've got single prints in D period and B period from the Tuesday session. And we've got a spike that was not tested at all on the Monday session, right? And even this in here is some pretty low volume before that point of control. The VPOCs are starting to stack up. And generally, once again, the idea is not to be short and play it as in, oh my God, it's a house of cards and it's going to come crumbling down. The idea is just, if you start to see the market accelerate, pay attention to how it responds at these nuanced levels. If you notice that the market reacts perfectly off of the D period single prints from Tuesday and bounces, right off of it, then that would just be an indication that who's in control. Short-term players. This has not been a pullback that's satisfied the ability for longer-term capital to get into the market. Remember, like a big institution, they don't care about the single prints here. An order comes across the desk to, fill, a couple $1 billion worth of S&P or whatnot. They got to go out there and they got to beat the VWAP. They don't care about your single prints in D period or B period over here and where the point of control is. They're trying to beat the VWAP and get a better price for the quote unquote client, right? So that's the situation on the ES. Let's go back on over to the platform here. Take a quick tour over to the QQQ. Let's give this a reset, actually. There we go. So Qs, very subtle, but we did print a brand new all-time high. The difference here is that we did not take out the overnight all-time high. We did do that, over on the S&P 500. Might have to take a sip of water on the recorded version. Rare. So what does that mean? Technically, there's room to move in the upward direction, take that out, repair the structure, and then maybe initiate a pullback. As mentioned on the S&P 500, the trend is the exact same here in the Nasdaq. You can clearly see the higher high, certainly a higher high from here. If you're just holding on to the bear thesis, which we pretty much laid to rest as soon as Wednesday's gap up took place, yes, it would. And again, I'm going to get the people in the comments section. Of course, it would have been nice to be long from smack on the lows. But, at least putting the bear thesis to bed here made decent sense. So as of right now, the higher low name of the game is the name of the game. And consolidation and continuation is what we're looking for blue sky territories. That's 628.50. If we pull back, the Tuesday gap closes. Also, this left side shelf, that's going to be around 617.60. The level beneath that is 616.50. So very close, within about $1 striking distance. And that's a nice higher low opportunity over this previous range right on over here. That makes decent sense. And it's also well above the Fib 38.2 if we take that same pull from the low to the high. There's your Fib 38.2. It's even, further south than that, giving some wiggle room into the Wednesday, Thursday, getting my days right here, 610 breakout on Monday, right? So let's clear that up. Let's jump on down to, let's actually talk about the bear breaking of the base case. If we get something that really overshoots, comes in here and then sets a lower high, that would be a little bit more concerning. Once again, I'd still be an advocate on the weekly chart for trying to find a higher low here off of the major gap close, which would be at 588.80. We'll deal with that when and if that becomes a reality. Let's jump on down to the hourly chart. Let's quickly hit this with a Fibonacci as well. Once again, fairly straightforward. Whenever the market starts chugging along to all-time highs, it feels like the videos get a little bit easier to make. There's not as much exploring and investigation to do. It's just about where's the higher low? How can you get involved? Right. So Fib 38.2 in here would mean that this is your picture perfect consolidation. Continuation would look like that, right? Fairly straightforward there. Fib 61.8. There we go. Right around the gap close area. That just kind of reinforces that zone in my estimation. A lot of the same commentary here as the S&P. Let's quickly hit it with the intraday anchored VWAPs. And lo and behold, it's the same thing, right? There's your anchored VWAP from Wednesday's gap up, confluence with the Tuesday gap from this week. Let's jump on over to the Nasdaq side of the market internals and see what we've got going on over here. This is where it's not as bad. You still have, lower highs as it relates to the volume flows, but they're still all well above 400 million, right? Which is different than what we saw in the S&P 500, the NYSE side of the exchange. You could see here a better move on the Tuesday session, but today starting to slow down a little bit on the advanced decline line and certainly slowing down to completely flat on the actual cumulative build out of the tick on the Nasdaq side. So for that reason, again, is it still worth watching for a bit of that divergence to lead to a slowdown or some kind of a pullback from or near the all-time highs? It makes logical sense to me, or at bare minimum, I wouldn't continue to force the issue long up at the tippity top of the move. Let's jump on over to the Nasdaq side of the market profile. See what we got going on over here. There's the arrow. Same story, right? You got thin structure here, you've got thin structure here, you've got thin structure in here. In the K period, you can see that value is slightly lower on today's session rather than moving up towards the top of the session. doesn't really, again, it's not a bearish call. It's just like, hey, pay attention to the idea that if we do see a liquidation break, there's like a bunch of reference points that the market could blow through, and it wouldn't be shocking at all. Right? E period singles in here, going back down to close the gap, as we know. There's just all this poor structure that exists underneath us. Not, again, to say that that is a short call. It is just a reference that we should be paying attention to. Where does the market find support, and what does it tell us about the types of participants? Let's go back on over to the platform here. Let's reset this to the small caps. And let's just keep moving. This, of course, did not set a brand new all-time high on the IWM. And instead, we really just built out sideways consolidation up here. Is that bearish? Not really, in my view. I think that the small caps will start to lead when everybody's positioned in the mega cap stuff already, which is kind of the first place that the money will flock back into. Balance sheets are strong. They've got, better revenue and sales and such than the small cap companies. The classic quote is like half of them are zombie companies that aren't even turning a profit, reliant on lower rates. So, why reach into the IWM quite yet and look for a performance booster when, there's still plenty of setups happening in the mega cap tech arena. So that's kind of the take here. Not really shocked to see, once again, you just look at the Mag 7 ETF that's up here at the top end of the list. Not a surprise to see that the indices here, S&P and Nasdaq, are printing new highs and small caps aren't. So it makes sense, and it's not overly bearish. I think that that's the frame that I would add here as well. In all of the indices, which we haven't really talked about yet, we are extended through the upper bound of the weekly expected move. I wouldn't say that that is like an end-all be-all. The market's been a little bit less efficient recently on the move back in the upward direction. I mean, just look at last week. Risk was priced here, and we closed above that. Risk was priced here for this week, and we're already above it. So I wouldn't get too hung up on the idea that the market needs to come back down into the range. If it does, that's fine, and we'll still just be looking at these daily higher-low setups anyhow. So along that line of thinking, consolidation up here that closes the gap over Monday's high, fantastic. That's 266.20, 265.25, bull flag consolidation, some kind of continuation, awesome. If we pull back deeper than that, just to pull back over the top end of the balance range from the end of last week, it's a 3-day range at 260, 265, also makes sense for daily higher low. Really, I mean, again, anything, kind of like anything goes. This works, this works, this works for a daily higher low. I would be a little bit concerned if we start to drop 50 SMA and spend more time underneath that. If we were to see a really like sharp panic sell, oh my God, gap close here, and then rebound and reclaim in probably the same week of the 50. And again, this is not into the end of this week, but maybe early next. That would be a decent look, but you'd have to spend very little time underneath the 50 SMA there and reclaim it quite rapidly for me to say like, I'm feeling still all right about the situation here. Of course, still a large window of price action there that is unfilled as it relates to the big gap. Let's jump on forward from the IWM daily over to the hourly. I mean, we could hit it with a fib even though we didn't make a new all-time high. From the low to here, you could see, again, over that 258.25, all set. Makes decent sense. Let's come in from here up to this high. Gap fill reversal on Tuesday's Tuesday's high of day. No, sorry. Tuesday's in here. Tuesday's low of day. Monday's high of day. Fib 38.2 checks out. That makes sense. And we would be a beautiful higher low setup, something along these lines. What else can we say? Let's drag in the anchored VWAPs and see what we got there. Slowly confluence, probably closer to Friday, not so much on tomorrow's Thursday session. And over time, the all-time high anchored VWAP, the pink down arrow, will start to coincide with that 258.25. So all in due time. That's like the nature of the market right now. Where's the higher low? Can we stay diligent enough? We just need to keep in mind, right? As we approach these levels, I would not get, all crazy and think, oh, no, here we go. The market's going to crash and burn again, and we're going to go to zero, and it's the worst thing in the world. Supporting evidence doesn't really, suggest that. And as we'll see, it's like, yeah, we might get a pullback here because there's some subtle bearish divergences. It just kind of means like don't chase longs at the tippity top of the move, and we'll fall back into being the permables of YouTube saying pretty much the same thing in every video. Look for the higher low or continuation, right? I know some people love it, some people hate it, but that's the reality of markets. Let's jump on over to the Russell internals. What do we see over here? 125 hit all 3 days, decent. Same conversation as the Nasdaq over here with the advanced decline line, and even worse of a build on that Tuesday session as we actually broke. Today, I'm not really that surprised because the market was flat and sideways for smalls, but on Tuesday, a little bit of a red flag there as it relates to the cumulative build. Let's jump on over to the Russell side of the internals and see what we got going on from this perspective. We have basically status quo. A little bit less thin structure in single prints, today obviously with just a normal curve. A period singles and then some singles here in G and F period from Monday. no real change to the analysis and what it means. Market profile tells us about the same as what we had in the S&P and the Nasdaq. The one thing to maybe carry forward is that we do have a lack of material excess on the high of day. We've got like maybe a little bit of excess there, but not a lot. So could use some repair. Obviously in the post market, we're already through that. We'll see if we end up opening on a gap or not for tomorrow. Let's go back on over to the platform here and let's take a tour through our S&P sectors. We'll do a speed round. There's not much in the way of divergence here. Mag 7 ETF does not need to go out and hit new highs to be, confluence with the S&P 500 or even the Nasdaq 100. So just the fact that this had no hesitation at all at the 200, it blew through that, it blew through the 50, blew through the prior bottom end of the overhead supply. It's just a lack of any resistance there that makes me bullish on what's going on for Mag 7. If you look at the XLK, again, I would not frame this through the lens of divergence. I would just say that it's making a substantial stride from the lowest low out to a new higher high in the trend count. I mean, huge higher highs, no matter how you slice the cake here. And there's plenty of room for higher low pullbacks, setting a daily continuation of the trend that's developed. If we jump on over to the XLY, big improvements here. This is one of the charts that I was still somewhat concerned about, even into the end of last week with the little doji underneath the 50. I mean, just a gap through it on Tuesday and continuation through the 200 today. Tesla, really impressive, up almost 7% on the session. It's hard to complain about that. You certainly have a break of the trend line from here now, or you've kind of gapped through that on Tuesday. So this is a fine chart to me, and higher lows at this point will sustain, in my view, for potential higher low continuation of the trend higher. If we go to the SMH, hard to complain about this chart, all-time highs, nice attempt to go lower on the ASML earnings. Market said no way, and this is actually an overshoot. That's a fake wick on the chart here. The low should technically be, I could have swore it was 442.45 or something like that. I will have to double check and I'll get you the right levels for tomorrow's episode of the pre-market prep. But SMH looks strong and the low should be here. It was a slight overshoot of the previous day's low, but it didn't actually come close to this level in there. And nonetheless, as we think about the trend here, even if that was a true wick, this is fine for a higher low. Even this is fine for a higher low into the future. So it looks good, looks like continuation after the V-shaped reversal into the afternoon. Spiders we talked about, financials, really impressive results from bank earnings so far. JP Morgan, a little bit of a sore spot on the watch list today, but Citibank, excuse me, Bank of America, Citibank, Wells Fargo, Goldman Sachs, I mean, just everybody across the board had reported really strong numbers in financials. Deal making is up, investment banking is up, trading activity is up, right? So really strong numbers, and the XLF being the second heaviest weight sector looks pretty darn good, recovering mainly over this 5120. If we just zoom back out on this, recall that 5120 is so important because of what it represents back there, so not really a concern. XLC, nice improvements, strong push through the 50, reclaiming that leaves room for a higher low over 115, and the daily trend is up. IGV, got to give a little bit of credit where credit is due, moving through the 50 and the 20 on today's session. Still a little cautious of this one. I go back to the thesis that we had not too long ago, which is just that there's so much volume turnover in here that it seems like this has to, I should caution the use of the word has to be, or phrase. This doesn't have to be a low, but I would be very surprised, and I think I'd maintain this stance. I never really wavered on this one. I don't think we're going to be in store for another, 30% correction on IGV from this. Is it building a bear flag on the weekly? Sure, but there's just so much volume turnover. You might be like sideways here for a while. I don't know. I'd like to see a little bit more proof in the pudding before I really start to get bullish on software. That might look like coming up into here, building out a higher low set over a flattening 50 SMA, and then continuation out to close the gap, perhaps. Maybe that opens the door for some setups in better software names outside of Microsoft, but that's kind of it for now on software. As it relates to XLRE real estate, we are getting a positive influence for the wealth effect here. It's a lightweight sector for the S&P itself, so it's not going to move the needle, but it is bullish. Let's take a look at healthcare. Eli Lilly has been a huge drag on this. I'm still trying to look for the higher low over the 20 and the 200. If we could break out of this range, maybe there's a 50 SMA test there, but it is ultimately a defensive sector. It doesn't have to lead the charge, and it certainly isn't. So as of right now, a little bit more neutral on healthcare. Looking at industrials, looks fine. You could close the gap and set a inverted head and shoulders neckline retest higher low, and that would be awesome. You could go look below and fail. tail on the gap, hold the 50, and then continue to the all-time highs. No problems there. Energy losing some steam as crude oil becomes less and less of the story. And, if you haven't picked up on it by now, or I should say, if you haven't picked up on it by now, crude is just becoming less and less of the story. The market's moving on and focusing on other things now that we're in the heat of earnings season, specifically with the AI names coming out in relatively short order. Of course, NVIDIA is always one of the last ones to drop, but nonetheless, that is it, and crude becoming less and less of a player. Even regardless of that, just notice where price action's trading. We're off the highs. We're continuing to press into the lows. Ideally, we'd break something like this 84.30 area and continue underneath the 50 for some kind of continuation lower. If we're going over to the BZ, and we'll have to adjust for contract changes on this one because it is rolled a bit more frequently. Let's hit this real quick. On the futures, adjust. Oh, it is already toggled. Beautiful. Look at that. Nice. Somehow managed to figure that out. It's just trading towards the low end of the range, right? It is not staying over the original 5-day ceasefire, spot at all. It has a lower high in the range. It's been constructive in the downward direction. So you lose $90 a barrel on Brent crude, and it's probably just more of a tailwind reason for the S&P to continue into new highs. So it's becoming less and less influential, but worth keeping an eye on still. As we look to utilities, a weak day today, but as we know, a defensive sector, this is fine. If it pulls back as the market's moving higher, I'd say posture is, A-okay at this point. Jumping on over to the XLP, what do we have in staples? A defensive sector. Trying to hammer off the 200. Maybe it's just a range trade back up towards these highs. I don't really mind this too much. I wouldn't get too hung up on a bear flag breakdown in here. If it does break down, it is defensive. It's lighter weight in general, so it shouldn't drag the market lower with it, but it would start to act a little bit as a headwind. Let's take a look at the XLB, the lightest weight sector of them all. Really plenty of room for this as a higher low right over the neckline of the inverted head and shoulders. So no complaints on the sectors. Generally, if you hadn't changed your tone by Wednesday, Thursday, Friday of last week, there's no reason not to as of right now. There's just been so much improvement through the supporting evidence. The sectors are acting perfectly. Let's check in on the ratio charts to get a sense for risk appetite. As we look here, this looks absolutely phenomenal. Still have some work to do on financials. Com still has some work to do. This is looking better as the days pass. Tesla really needs to come out of its rut. This is no longer telling us that we have risk off, nor is this and the XLU. Let's go to the B and A sets, or I should say A and B sets. We've got big improvement, big improvement, big improvement, big improvement, big improvement, big improvement. So ticking 6 for 6 on the A set, that is a bullish indication for sure. Let's go to the B set, gold ratio moving slightly higher. That's bullish. So we take a look over here, starting to trigger a red sailor shift. I just think Bitcoin's acted a little bit like a laggard here, if I'm being honest. Not that Bitcoin needs to be at all-time highs, but I would think as the market breaks back into an uptrend, Bitcoin should be breaking out of its range, and it's just simply not. So as it comes to the divergence categories, could you say your market internals a little bit, your small caps a little bit? I know I said I wouldn't really count that, so hardly. Bitcoin, definitely a little bit of a bearish divergence there, but is it enough to go out there and short the market? Not really, right? Look at your TLT ratio, clear outperformance and preference for equities as risk appetite. Let's jump into the dollar and interest rates. I think that this could be a watch tomorrow. If the dollar bounces off of this prior breakout level, that certainly would be cause for a pullback in the market, I would think, and we'll see if, bonds get sold, rates go up a little bit, and that causes that whole sort of configuration to work out that way. If that's the case, then once again, it's like this is not such a big break in the dollar. I'd be way more concerned if the dollar was up here breaking out of this, causing a pullback from the all-time highs in the S&P versus some kind of a move into a prior set of resistance, which could now act as support. And then if we bounce, we have room for a lower high, right? So that could also be a little bit of a watch for the pullback to develop tomorrow. Let's go on over to the inverted ZT, which is a proxy for our Fed watch tool. You can see that we're pretty much unchanged here. So still thinking that we probably have 90% plus odds. Yeah, there it is, 98.4. Let me know if that's a radio station near you. But 98.4% odds of a pause for the next meeting, which is, of course, on the 29th. And if we go to the aggregated odds real quick, we could see that these odds, I actually keep shifting in the upward direction. It used to be June of 2027, but you can see the aggregated odds are now for April of 2027, moving in the right direction here. And the upward direction is bullish as it relates to expectations for the equity market. Let's jump on into the Fed, not the Fed watch tool, but rather, we just looked at the Fed watch tool. The market calendar. There we go. Looking for words. PPI came out earlier this week, and it actually came in better than the estimates, right? Way better than the estimates on the month-over-month stuff here. You could see 0.1 versus 0.4 and 0.5 versus 1.1. Are you kidding me? So really well received on the producer side of inflation. Goolsby was a little bit of a hawk there early on the Tuesday session, and then today, not a whole heck of a lot as it relates to the Fed. The beige book did come out, and I've yet to read it, so that's my afternoon reading before bed. Let's jump into the earnings calendar. Really, ASML was the story of today with an upgrade, right? I shouldn't say upgrade, but a revised forecast in the upward direction as it relates to their revenue, right? So there you go. It raised forecast, so pretty much a double beat and raise here out of ASML. The stock was, a little volatile and violent in the overnight session, pre-market session, I should say, but it didn't do anything wrong, right? If we just go back and over the charts here and go to ASML, I mean, come on, really? That's a big down day, CNBC? Remember, ASML stock sinks amid tightening China restrictions despite strong earnings and guidance. If that's what sinking looks like, then hey, put me on the Titanic. I think we can make it out. So no problemo over here. And as long as we're over the low cheat high at 1410, give or take, 50 SMA, 20 SMA, what a great looking hammer. What a nice rebound. And is there some way to get involved, in just consolidation and continuation into blue sky territories on something like an ASML? Let's go back to the earnings calendar just to talk about what's on tap for tomorrow. It's TSM, Charles Schwab, then Netflix and Alcoa to end the week here. Those are really the top watches. And then it really heats up with some Mag 7 names next week. Let's keep an open eye and ear for when the calendar is released, although, all the dates are set, but the visual is always a nice way to organize it. With that, let's jump back on over to the platform here. Let's finish up our supporting evidence categories with, of course, a quick tour through the inflation impulse. Do we have one? Survey says absolutely not. No new high on that, which makes sense after PPI. If we jump into credit spreads, they continue to move in the downward direction, which is bullish for risk appetite. Let's jump into our HYG. Ding, ding, ding. We've got a winner for bearish divergence. As we take a look at the HYG, you could start to see here, it set a lower high into the afternoon versus the higher high on the grind in the S&P 500. So if you want to add another one into the tool belt of, hey, probably not great to fish for new longs up here, HYG would fit the bill. Let's jump on over into our total breadth. Another one with ding, 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 a little bit of a bearish divergence. Moving average charts moving in the downward direction. If I just open this pane up actually all the way, you can see the small downticks a little bit better. And the new highs versus lows also downticking here as the market went out to brand new record highs. So is it really the time to be buying, new longs up there? Probably not. If you look at the RSP, we're nowhere close to the high. Again, this is not a bearish call. This is just like, hey, be mindful of your risk if you're trying to fish for new longs in the S&P at the highest high. Generally, a pullback would be far better to manage risk against, allow the RSP to go sideways a little bit, and then hopefully as you're getting a higher low in the weighted S&P 500, you're also getting this to break out and make a new high in the equal weight, right? That would be bullish for a broadening rally to ensue. If we take a look at the QQQE, a little bit better than the S&P 500, taking out this prior left side, but still not quite at all-time highs. Again, not a bearish call, but just another reminder that breadth is not really all that solid. It's really the Mag 7 that drove the market higher today for the new all-time high. It wasn't broad-based participation. With that, let's jump on into our volatility complex and finish on a strong note because this is looking pretty darn good to me, and it will act as a strong indication, in my view, over the next couple of sessions. If the market pulls back and the VIX can set a lower high at or near 20, fantastic. I would be buying that higher low with both hands. If we take a look at the VVIX, right, you could see in here, if this sets a lower high anywhere under 120, there's like so much room to stay under 120, then great. Once again, that is a buyable higher low, in my opinion, and that's sort of the way I'll be acting as and if that shapes up. Now, what would break that would be if the market pulls back and the VIX skyrockets to like 25 plus, I would just say, if you're up here towards that gap level, 2410, if the VIX is at 2410 on a gentle start to a pullback in the S&P, then like, okay, hang on a second, something's wrong here. Now, VIX may find a little bit of an elevated dare I say, range to trade in for a little while as we go through earnings season. It's pretty typical of earnings season, right? You're generally not going to say depressed dead on the lows in the VIX as you get all this uncertainty as it relates to gap potential from earnings reports, right? So not really shocked to see the VIX, you could say you had a little bit of a lift there into the afternoon. I don't think it's a huge enough divergence that I would pay attention to unless we were over 20 the market was headed higher and the VIX was headed higher. Let's take a look at the vol futures just to get a sense for what's going on here. These did expire. We had VIX expiration. It's always on a Wednesday. So there you go. Your new updated contracts, the M versus the K. And you can see that we're still in nice contangos across the board and the different durations on the curve there. 9 versus 30-day VIX checks out. And take a look at this. This is perhaps one of the more compelling looks as well. We're using the prior floor as a new ceiling on the 1-day VIX, which just tells us that participants, yeah, they're settling down quite a bit here. So volatility looks great. Supporting evidence generally looks good. There's nothing overly concerning as it relates to, oh my goodness, rug pull, we're going to go back to zero. When I say zero, I'm really being, hyperbolic, if you will. There's nothing that really suggests we're going here again. There's nothing really that suggests even this is highly likely into the end of the week. Now, could some crazy news drop that nobody could possibly see coming? It's always possible. It's a risk you always have to take being a participant in the market. But right now, as it relates to risk appetite positioning and sort of the intermarket dynamics, I certainly seem to think that we are in a nice developed uptrend here, or the early stages of a developing uptrend, and we should be looking for higher lows to execute on, right? That's the bottom line here. Let's jump on into the core list of companies. Let's get the job done here and move forward with our afternoons. We've got NVIDIA, right? Very straightforward. Higher low here over 193.25. Technically a range breakout, so a pullback higher low above that would be pretty compelling for continuation up towards this unfilled gap. I would prefer not to chase this up here. It's my personal preference. Is it a valid breakout? Could you be long from here looking for higher? It wouldn't be wrong, I don't think, but my risk tolerance is not quite that sturdy on NVIDIA. I'm also a little bit of the belief that NVIDIA has been priced to perfection. I don't want to argue with price action too much, but for me, it's got to be a higher low on NVIDIA. I can't really chase a breakout here from wall to wall up at the highs. I think there's new semiconductor leadership that we'll likely have. Nonetheless, it's still the heaviest weight company in the S&P and the Nasdaq. Let's take a look at Apple. Nice breakout of this balance range over the 50 SMA and just, straight up continuation for a range double. So that is sort of come and gone as a setup. I would start looking for pullbacks to stage higher lows above that or just slow continuation above. Remember, Apple typically moves like a snail. So 266.50, 261.80. Let's jump into Microsoft. Really nice move here. It's nice in terms of the magnitude that it's moved. It's not really nice in terms of the way it's acted for entries. So what's the next setup? I'd love to see some right side build out on this Microsoft. Can we stage a higher low? Can we stay over the 50 SMA? Can we maybe clean up, some of these gaps, build out a right shoulder, and then go from there? For the earnings gap, TBD. That's the maybe. This is definitely one of the names to focus on in the software group just because they have the Azure cloud. Right. And, it's not necessarily just, Teams and email and whatever software. It's the cloud infrastructure that they provide that, that's where the dollars come from. So as it relates to Microsoft, I think it could build out right side. And even if IGV is weak, you could see Microsoft try to remain or attempt to become a Mag 7 participant like some of the others. So speaking of, let's take a look at Amazon, right? Really tight inside bar on today's session. I am looking for continuation out of that to all-time highs, or if we do pull back, higher low in here and continuation like that. So I'm going to sound like a broken record on a lot of these things. The main idea is to really just not maintain any more of the bearish stance in here. Be mindful of the risk on the highs. Look for higher low pullbacks up against key levels, mainly gap fills from the Tuesday session and setting higher lows. So this is going to be on Google from 323.85 to 321. If we go deeper than that, that's fine. Your 50 SMA will slowly start to curl back higher. 311 would be where I'd like to see that start to see that step up in a more meaningful way. If we do just get like high consolidation up here and continuation, of course, your all-time high target is on the table. Let's go on over to Broadcom. Really strong for semiconductors, stronger than NVIDIA. Look at where we're at relative to this balance range. Really nice breakout here. Honestly, a little disappointed in the way that this traded against the prior gap. It gapped into the midpoint, partial gap close to the downside, then closed over the top end, really. So if you're long it from a swing perspective, it's been absolutely phenomenal. If you're trying to find your way into it on a day trade, a little bit tougher here for Broadcom. So same concepts, bull flag up here, continuation over time. If we do pull back, maybe the gap fill reversal could be playable. If we go deeper than that, I would say anything down here is absolutely a very interesting spot around 350, 325. Continuing along to the metaverse, I think this is one of the only names I would start considering for a short. This and Palantir, perhaps. Maybe even Tesla, we'll talk about it. But daily 200 SMA test, prior left side. So do we get some kind of a look above and fail on that to pull back in? Maybe. I mean, it's been impressively strong off the lows. The fact that it didn't offer anything here. It did go sideways for a couple of days. Like Monday was not a knockout day for Meta. The fact that it was sideways in here, I thought if it was going to be a short, it should have been the 50. for a rejection of the overhead supply from this box. Obviously not the case. So as of right now, look above and fail, maybe as a short underneath previous day's low, maybe as a short for a gap close down here. But I would definitely not overstay my welcome on the short side, probably looking at a higher low opportunity and then some sort of build out in the upward direction. Jumping on over to Tesla. Tesla here is, still in a downtrend. I would firstly start by saying that you're still in a downtrend here with the potential for lower highs. Depends on how you define the downtrend. You could do this and you're still at it. You could do this and you've kind of broken it. This is why I don't really love trend lines. You could certainly say your steepest one, your tertiary would be something like that. But look at the moving averages, right? This is the first major break and Brigade bolt retest underneath the daily 200 SMA. So I'm a little bit more fond of saying, can we get a look above and fail there and then retrace all of the thin structure from today's session? Now, Tesla can have a mind of its own. So this is like a right or right out trade. You can't really afford to stick around and find out whether or not this is going to work. You're either going to see it and, now you start saying hourly head and shoulders and whatnot, and now you're here. You either see it or you don't. Right? If this goes like this and then is promptly trading back up here, you better step aside because, Tesla is one of those, it's the characteristics of Tesla is that when it goes for a rip and a ride, it's going to go for a rip and a ride. And, if you're out for a rip, are you, bud? You're not going to want to get steamrolled on the short side. So watching that 200 SMA very closely, if we go look above and fail, again, head and shoulders in there is playable for the thin structure retracement. If we are just in here on a, no extended move to the 200, if we're just failing the 50, yeah, overhead supply, drop in the move underneath 387.25, thin structure. We've talked about that enough, okay? So that is Tesla. I like it. Let's jump on over to JP Morgan. Look below and fail on the gap. I would expect some more sideways in here. Even if we close the gap, you had really great strength over on, let's go to a Morgan Stanley, up at all-time highs, Bank of America. Moving out more considerably in the upward direction. Let's go to a Goldman Sachs, looking better than JP Morgan, for example. So, I don't really think that it's going to be the end of the world. If this closes the gap, there are enough other financial institutions. Let's go back on over. Did we look at Wells Fargo? I can't remember, but there's WFC. This one looks horrible. Let's go on over to Citibank right there. Right, that's screaming to new all-time highs. So these names look good. Maybe Wells Fargo and JP Morgan are the laggards, but not enough of a concern here to drag the S&P lower. Even if you go gap fill reversal, hard pressed to be a mega bear on that. Looks to me like there's an opportunity to build out a higher low. Let's jump on over to Palantir. This is another one that's possibly short tomorrow up against the moving average stack for something that looks like that. Been sort of stalking this up against 136. Didn't happen there. You had the nice inverted hammer, never got close enough to the prior day's low. So can we go look above and fail on the moving averages, retrace to 136, set some kind of consolidation here and continuation? That would be my watch on Palantir. If it is going to blow right through those moving averages, then let the ship sail. There's plenty of other longs to focus on. I wouldn't get too hung up on Palantir. Let's go on over to AMD, certainly a big leader in the semiconductor space. Look at it relative to NVIDIA, up, and away. Not that NVIDIA is not, but this is stronger on AMD. If we can consolidate and produce some kind of a higher low, I'd love to get involved in like a weekly higher low continuation out of this balance range over the span of time. Earnings are a little bit further away on this, so there's plenty of time to build a cushion. If it ends up being a swing trade opportunity, I'd love to see if AMD can produce that for us in the near term. Let's see if we can get bull flag like that, then continuation into blue skies. Let's jump on over to MU. Beautiful setup, probably my top watch for tomorrow. Bullish 3-bar play with the inside hammer on today's session. All of its, let's go. Let's double check. WDC, brand new all-time highs. SNDK, brand new all-time highs. STX, I think was the laggard, right? Oh no, look at that. All-time highs over on STX. MU is the one that is officially lagging. So in memory, it was the only one to not break out and go for a brand new high. Let's see if we can get consolidation and continuation out of this up and over 471.35. If you want the true hourly inflection point on the intraday, ooh, yikes, it's actually going to be there, believe it or not. It's reclaiming today's opening print at about 457.80 unlocks, and that should honestly be a dim gray. Let's do a little bit of our homework together. There we go. Up and through that would be interesting for a move to the all-time high, through the all-time high, seeks your continuation. All right, that is MU. Watching that very closely. Love the hold on the 440 print from this morning's session. All right, let's get into these trade ideas. Let's stay on the topic of semiconductors. AMAT is the first one on the chopping block. I'd love to see this. Right, look below and fail on the 2-day lows, closing back in range. Can you get consolidation and continuation out of a daily higher low over the top of the gap? Right, here's your gap up from last Wednesday, higher low opportunity, left side peak. Can you stay inside and get continuation to blue skies? AMAT looks pretty darn good to me. ARM, next up on the long watch. Let's see if we can get look below and fail to actually trigger via a break of today's high. Some kind of a move out of this. Not that I'd call this like a micro cup and handle, but something like that perhaps. If you zoom out on this, What I particularly like about it is that it offered strength before last Wednesday's gap up on this gap right there, right? So this move, which was on the 25th, really strong gap up. Recall that they had announced the sale of their AI chip, which kind of put this in play in the first place. Nice hold of the 200 SMA twice, and now we're back above what I would consider some really loose price action. We finally got 2 tight days here on ARM, so let's see whether or not this can go for a continuation play up and over those 2-day highs. So really just watching the prior day high on ARM. Let's go on over to another semi-name, TER, Teradyne. Very straightforward, break of the trend line, break of the horizontal, and we're sort of looking for continuation into blue sky territories. There's really not much more to say other than that. You're looking at a higher low and potential continuation for a higher high. Let's move on over to, let's go VIAV first, VIAV, and see what we got over here. Gap fill reversal, hammer high. If we take that out, looking for a move into the equal highs, if not continuation to new highs. That would be over 40.30. All right, so that is VIAV. And just want to see that maintain yesterday's low as the hammer. Let's go on over to fly. There we go. This is pretty straightforward. Inside bar. Nice hold back over 36.25 today. It probably could have been viable today back inside of the multi-day range, but for now, I'm just going to be playing it as an inside bar setup with a stop underneath that low, targeting at least the equal high, if not continuation, out to a new high. This is a newer IPO, and prior areas of resistance in here, probably closer to about that 49 handle up there. I mean, you could even say 50 if you like nice round numbers, but 49 works for me. So some kind of a move here initiated with a stop under either the current day low or the previous day low, and then ultimately looking for something like that. This is a beautiful weekly double bottom. We've broken the neckline, and you're getting really strong action that's staying over the top end of that break. So fly, I like it. You could say there's some relative weakness because the market's screaming to new highs and this is kind of down. I could maybe see that angle, but for now, fly. Oh, that's what I got there. Let's go on over to FSLY, Fastly. This is a reclaim of the daily 50 inside bar printed today over the high. You could get a retracement into the 20 on a 50 hold, and you could do two things. You could put a stop under the current day's low and look for that continuation, or you could put a stop under here, being a little bit looser with it. You only get about a 1-to-1 into the 20, so maybe you hang on to it and look for another equal high. This has been routed a little bit alongside something like a net. NET, if I could spell, a Cloudflare, for example, and even an AKAM, for example. It's been routed, but not as bad, right? So look at this big blowout of the 50 SMA coming into the 200. Honestly, let's go back to the net, and you could see here it's just completely wrong. 20, 200, 50 SMAs, looks like a bearish lower high underneath. It was not in an uptrend prior. So if as I look at FSLY, there we go. Much stronger backing of trend here. First test of the 50 after this gap and go from earnings. I think it's a reasonable place to try a first look as a pullback long in this name. It was a leader. Let's see if it can continue to act as a leader out of FSLY. All right. That's what I've got in today's episode and installation of the midweek market update. There's so many scans out there that I couldn't get them all into this video. If you want to go back and reference the watch list, the complete set from last Saturday's update, you could do that. Where else have we posted it? It was in the newsletter from Sunday. There's a number of places where the 20 plus, it's grown to like 30 plus names at this point that are definitely on top watch for continuation plays into this near-term future. Really, that's kind of what we're looking for out of this S&P 500. So that's it. That's what I've got for you in today's episode and installation. If you learned something new or enjoyed the video, let me know by leaving a comment down below, or a simple thumbs up goes a long way. As always, we'll be live at 8 a.m. Eastern time tomorrow morning for another episode of the pre-market prep. Hope to see you there, building a game plan for the day ahead. And that'll do it. So have a green trading week. And as always, I will see you in the next one.